Malaysia will roll out measures to revive the local stock market, including lowering stamp duties for shares traded on Bursa Malaysia. Prime Minister Datuk Sri Anwar Ibrahim said today the government will reduce the stamp duty for locally traded shares to 0.10% from 0.15% of contract's value, subject to a maximum cap of 1,000 ringgit per contract, effective next month. This is aimed at making the Malaysian stock market more competitive. Meanwhile, the Securities Commission (SC) and Bursa Malaysia will expedite the process for initial public offerings and reduce time to market. This should encourage more companies to be listed on Bursa Malaysia and ensure Malaysia's competitiveness and attractiveness is sustained. Additionally, the Ministry of Finance and the SC will look at policies to facilitate and attract the setting up of family offices in Malaysia in order to attract a larger pool of investors to support financing for small and medium-sized enterprises and the new economy. Anwar said they will also work to promote corporate venturing to drive greater domestic direct investment through more facilitative tax and incentive policies and widen the definition of sophisticated investors. Astro Malaysia Holdings saw its first quarter FY 2024 net profit plummet by 84.1% to 15.9 million ringgit as earnings were impacted by higher unrealized foreign exchange loss. This, the group said, was due to transponder lease liabilities amid the strengthening of the US dollar. Revenue fell 7.4% to 891.13 million ringgit, due mainly to the decrease in subscription revenue, advertising revenue and merchandise sales. It declared a first interim dividend of 0.25 cents per share. Looking ahead, the group maintains a cautious outlook amid macroeconomic headwinds and will carefully monitor business conditions whilst prudently managing costs. Astro Group CEO Ewan Smith said the group's bold playbook is transforming Astro into a digital streaming company. About 25% of its customers have subscribed to its streaming TV packs, and its average revenue per user has grown by 1 ringgit 30 cent year-on-year to 98 ringgit 70 cent in the first quarter of FY 2024. Astro's share price fell 0.75% to 66 cents, valuing it at 3.42 billion ringgit. Carlsberg Brewery Malaysia said it will not be renewing its distribution agreement with Japan's Asahi Group Holdings when the deal expires on December 31, 2023. Carlsberg was awarded the rights to locally manufacture, sell and distribute Asahi's premium beer, Asahi Superdry, in 2011. In 2019, the two parties inked agreements granting Carlsberg the exclusive right to brew, produce, distribute, market and sell the brand Asahi in Malaysia and to import and distribute the brand Asahi in neighbouring Singapore. In a filing with Bursa Malaysia, the brewer said the decision was mutual and amicable and that it will continue to support Asahi as its exclusive distributor for the remainder of the year. Carlsberg Managing Director Stefano Plini said, following this, the brewer will continue to drive its premiumization strategy. The non-renewal of the Asahi agreement is not expected to have any material financial impact on Carlsberg for FY 2023. Carlsberg's shares closed 0.29% lower to 20 ringgit 46 cent, valuing the brewer at 6.26 billion ringgit. Fenxiang Development, the single largest shareholder of Apex Equity Holdings, has failed in its attempt to appoint 3 directors to the board, despite owning a 15.78% stake. Fenxiang's nomination of 3 directors, Quentin Gerard Fellow, Lim Tian Huat and Hong Kim Hyong, received 45% of shareholders' support at the group's AGM, while 55% voted against. Meanwhile, incumbent directors who offered themselves for re-election received 55% of support from shareholders, while 45% voted against. Those re-elected were Group Executive Chairman Farhash Wafa Salvador, Executive Directors Dato' Leong Wai Ling and Lim Kok Eng, and Independent Non-Executive Directors Woon Wai En and Rosana Shamsuddin. Executive Director Lim spoke to The Edge after the AGM. He said management's focus going forward is on sustaining Apex's profitability amid ongoing competitive market conditions conditions and maintains that the current board of directors are independent from the group's former shareholder Ace Group. Apex's shares ended the day 1.67% higher at RM1.22 for a market capitalization of 260.55 million ringgit. National car maker Proton Holdings expects sales this year to surpass last year's total sales of 141,432 units, fueled by unabated appetite for its cars and the launch of its all-new X90 model. Proton CEO Roslan Abdullah said the car maker's target this year is higher than last year's, and it's already witnessing a certain percentage of increment compared to 2022. He was speaking to the press after this afternoon's launch of the Proton digital experience Proton DX Centre in Kuala Lumpur. Last year, Proton sales stood at 141,432 units, the highest since 2013. As of May this year, its sales stood at 62,970 units, a year-on-year increase of 38.9%, driven by the festive period and the end of tax-exempted car deliveries. As for the X90, Roslan said the newly launched SUV is expected to boost Proton's total industry volume this year. The X90 has clocked bookings for 5,000 units since it was unveiled in May, while some 250 units have been delivered to customers.